Welcome to Sectors Up Close. I'm Elena Casas. Today we're going to focus on utilities with Aoifinn Devitt, the Chief Investment Officer at Moneta Group. Utilities are considered defensive, and while last year they were the only other sector aside from energy to advance, this year they are by far the worst performing of all the 11 S&P 500 sectors, down about 17%. Some of that is down to just one stock, NextEra, the world's largest generator of wind energy and the sector's largest constituent, lost nearly 40% as its airy valuations were blown back down to earth. For some, this year's declines make these stocks cheap, but for others, there are serious obstacles to generating both electricity and returns for investors. They include the rising cost of capital and ageing infrastructure. And while at 3.6%, utilities' dividend yield is double the S&P 500, it can't compete with the current yield on government bonds. So, should investors plug in or switch off? Let's ask Moneta's Aoifinn Devitt. Aoifinn, hi, thanks for joining us. Now, some analysts clearly think that at these low valuations it's a time to buy utilities, but others suggested shorting XLU, saying it may fall by as much as 20% to make it competitive with Treasuries. So, which side are you on?
I'd say I'd like to own utilities at this juncture. They are a critical piece of the economy and how it works. In terms of a broad-based equity portfolio, they're also a critical piece of that. As you mentioned, they provide the value, the defensive orientation. We had been including utilities as well as other real assets because they had that inflation hedging characteristic. Inflation has obviously been a rising concern now for 2 years. Clearly, it has turned over in terms of its rise, but it is still a factor. And we have to remember that the yields coming out of utilities tend to be inflation linked, just the same way that a lease, for example, on a plant would be inflation linked. So that's quite valuable in a portfolio because remember, other equities don't necessarily correlate to inflation. They maybe have a loose correlation. So that's still there. It's still a backbone of a portfolio. I wouldn't say shorting at this juncture is appropriate given how much that XLU has actually fallen. We're seeing values that were last seen around March 2020. So clearly quite a beating has been taken. And I suggest, like many things, many of the stresses are already discounted into this sector, and it is a good time to be staying close to your core weight.
As a defensive home for money, though, they are competing, of course, alongside numerous other things, but especially US Treasuries. What's the impact of much higher Treasury yields on this sector?
We are seeing Treasury yields at this level being seen as a shiny new object for many investors who would have maybe only held a little bit of Treasury yields or maybe then in a flight to safety. Now at these current yields, they're seen as being very attractive. But what we have to remember is that fixed income volatility still remains extremely high. We still don't know if the Fed is at the end of its rate rise cycle. I've seen many investors quite disappointed at the total return that bonds have displayed recently. The yield is still there. That has never been in question, but it's the fact that the total return has changed as those bond principal values have changed. So utilities, on the other hand, do still eke out this steady state dividend. They will still participate with equity markets. They may lag certainly the big tech stocks, but they're still there. So I'd say be very wary of dumping utilities in favor of bonds today because easy come, easy go in terms of the bond yields.
Many US utility companies do need to make significant investment in infrastructure, though, don't they? Because much of the US electricity grid does need upgrades. And we saw, for example, that PG&E in California went bankrupt following the wildfires after it was held responsible for grid failures. What's the possible impact of that on the sector?
The aging state of the infrastructure has been a huge driver of investment in the sector for many years. We heard about the Inflation Reduction Act and some of the stimulus there that would be there not only for consumers to switch their form of energy, but also for public and private partnerships to emerge, whereby private sector capital would move in alongside public sector capital in order to shore up some of this aging infrastructure. I think what we're seeing now are just some of the downsides of that crowding in the sector, that the valuations were perhaps too high. However, the demand by investors to invest in infrastructure at an institutional level has not gone away. So I expect a lot of that capital expenditure to be forthcoming in the near future. And the bridges still need to be replaced. The airports still need an upgrade. None of that has changed. So that to me is a very positive force for the sector.
How would you advise investors to approach it then if they're new to buying into this sector?
I'd say see it as a small piece of a portfolio, 5% say overall of an equity portfolio. Should be seen as ballast. It's going to be boring and defensive. That is the essence of most value stocks, most defensive stocks. None of those have been in favor at the moment. We are still seeing the rise of tech. As shine comes off, as there is rebalancing, as investors reconstitute their portfolios, I believe that utilities will continue to form a large part. And remember, even when that value comes down and equity valuations are under pressure, you will still have that dividend. And the dividend should be inflation linked, which makes it more attractive than other dividends. And certainly then a bond yield, which is generally more of a deflation hedge, not an inflation hedge. So I'd say be realistic about where infrastructure and other utilities can get you. It's not going to get you into the stratosphere, but it will also deliver you that steady state return, which a large part of your portfolio has to be focused around that steady state return.
Aoifinn Devitt, CIO of Moneta, thank you so much for that insight. Well, that's your roundup of the utilities sector. I'm Elena Casas, and this is Reuters.